Okay, welcome to a video which is going to look at public goods. This is a tremendously important part of your microeconomic syllabus, linking things like externalities and market failure, and also some macro points as well. You know, the whole question of do we need a state? Why do we need a state? These kind of fundamental questions are really about who should provide the goods and services. Should it be the market, or should it be the government sector? And of course, in the absence of public goods, there is a risk of complete market failure or missing markets. So we're going to explore some of these public good issues with you and raise some important evaluation arguments that can take you towards your A-star performance. Very quickly, of course, most countries are mixed economies. The degree of mixing will vary from state to state. But typically, the state has a key role to play in mixed economies, both in terms of welfare, provision of merit goods, public goods, and also, of course, in things like regulation of industry. Much for the state to do. It's important to have good examples of pure and quasi-public goods. I tend not to use street lighting because it's kind of so passé and so 2005. So instead, focus on things which are really significant. I mean, tremendously significant for millions of people. Sanitation infrastructure. Flood defence projects across big communities, the public good nature of policing. It's not a pure public good, but the public good nature of good policing in terms of crime control and lowered risk of serious crime. Very, very important point, we think, at the moment is this issue of risk of disease, epistemological risk of disease from parts of the population which are not vaccinated. So the economics of vaccinations has a very strong public good aspect to it. So too, freely available knowledge, online learning systems, public service broadcasting, the feature of the BBC. Again, the public good nature of infrastructure investment, for example, irrigation systems for a community, and the availability of city parks and national parks and the wider natural environment. Very importantly, you have good examples of things which have a strong public good, but not street lighting. That's just too simple. You also need to know the distinction between a pure public good, which meets all three criteria of non-rivalness, non-excludability, and non-rejectability, contrasted with quasi or quasi-public goods, where they're essentially public goods, but they are semi-non-rival. So, for example, a crowded beach or a very busy urban park, there's no major issue, but when it gets very crowded, it becomes rival. Space becomes at a premium. Open access Wi-Fi networks become congested, particularly if mates of mine start downloading sports programs and that kind of stuff and films. Oftentimes, things like those things become rival, or they become semi-non-excludable. So you start fencing a park, or you start charging for entrance to an attraction, for example. So quasi-public goods. Now, keep in mind also, in terms of your A-star evaluation, that technology is causing a blurring, a fuzzying, if you like, of the distinction between some public and private goods. So, for example, encryption allows a supplier to exclude a non-payer. The product remains non-rival, but now becomes excludable. Think, for example, pay-per-view television or Netflix. Encryption devices exclude the non-payer whilst the product is still non-rival. Smart road pricing, for example, is another good example of that. Open source software, the Creative Commons movement has made a lot of digital information and coding, for example, public good in nature, available to all. That's changing the nature of public goods. The live streaming of events is similar to encryption. You can charge and exclude, if you like, the non-payers, if you so wish. It doesn't have to be the case. So why are public goods important? This is tremendously significant in terms of your revision. Make sure you have 2 or 3 really good points that you can make in your exam. Let me take you through 6 points. The first is there's an important relationship between how much the government invests in public goods and basic long-term growth and essential human development. If you have good sanitation systems, if you have proper sanitation systems which reduces open defecation on the streets, for example, that, to my mind, is a public good. Turn it on its head. If you don't have that facility available, it's probably a public bad. Second point is about innovation, so linking public goods to dynamic efficiency. If you have strong institutions, rule of law, protection of property rights, that's a public good aspect, isn't it? That helps to support innovation because it encourages people to commercialise their research in the hope and the expectation that they can perhaps make a profit from some of that research. A really important point, pardon me, is that technology needs public goods. If you're Elon Musk with your Tesla electric car, you need roads and you need road safety systems. If you're a major utility provider, electricity needs industry standards. We know that if you've travelled overseas, for example. If you're a smartphone provider like Apple and Samsung and others and Google, you need the ability to buy property rights on the spectrum. Without those things, technology is held back. Technology needs public goods. Linked to this is the role that the state can play, in particular in the embryonic early stages of groundbreaking research. This is the famous Mariana Mazzucato argument that some of the really smart features of the smartphone, or most of them actually, were initially state funded, publicly funded. GPS, Siri, touchscreen display, the internet, all of those were publicly funded. Would they have emerged as fast as they did, or at all, purely in the arms of the private sector? There's also a macro element. I've put this in yellow. I just want to distinguish and link a little bit to macroeconomics, partly with the synoptic paper in mind. But there's a very strong public good nature of new infrastructure, linking that to aggregate supply and global competitiveness. And I put in green here the equity point. This will be a theme, I think, running through much of the best answers in 2019. The extent to which intervention in any market or any sector has an impact on equity and fairness. So you can make a case for saying that many public goods are crucial to our social welfare. Basic education provision, basic learning facilities, sanitation facilities, etc. Many public goods have no market price. You're not charged for them at the point of consumption. They're not subject to the profit motive, and therefore they become affordable and accessible to many more people. In that sense, public goods can be seen as progressive. Here's the famous chart from Mariana Mazzucato's 2013 work. She looked at the first generation iPod in 2001, which eventually became the iPod Shuffle and then the iPad Nano. Remember those? Maybe a bit young for that. But many of the key technologies that ultimately lay behind the iPhone, which was launched in 2007, were in fact publicly funded. Eventually, of course, the iPhone became the iPad. So lithium-ion batteries and signal compression and hard drives and microprocessors. Much of the technology actually emanated from investment in the US military. All industries need public goods. That's a great phrase for an exam. All sectors of the economy need public goods. Manufacturing, robotics in car making. It needs power systems. It needs water treatment systems. It needs trust in the banking system. Trust is a public good. It needs strong environmental laws to operate within. It needs industry standards and corporate law. It needs daycare centres for the people who work in the factories. It definitely needs a literate and educated labour force. It needs physical connectivity. All industries need public goods, and societies where public goods are under-provided by the state oftentimes suffer. So, this is the key bit of the presentation. That was just the warm-up. Here are essentially, let's 6 arguments for saying the state should increase spending on public goods, and then 5 points coming up on my final slide, evaluating the case that the state should spend more. This is a classic 25-mark essay question. So what is the case for an increase in government spending on public goods? First of all, economies of scale. It may well be more efficient in terms of supply to provide public goods across the whole community at a state level or a government level, because economies of scale bring down the unit cost per user. The second point is that public goods provided perhaps at a zero price, or perhaps you make a contribution to cost, but at a low price anyway, public goods improve access and affordability. They make public goods affordable, and this is crucial for equity and fairness. The third case is a pure market failure case because the private sector, the free market, may not even provide pure public goods because of non-excludability, non-rivalness and non-rejectability, but in particular because of non-excludability. Therefore, there is a first order case for the state to provide if the market is missing. My fourth point is that macro one from a few minutes ago, that public goods can drive higher trend economic growth and improve basic development outcomes. Public good investment can be seen as, in that sense, as a fiscal supply side policy. And importantly, public good investment can actually lead to higher private sector investment. If the state builds new roads, improves the housing stock, if the state improves the sanitation systems and the telecommunications networks and things, that can act as a catalyst for private sector investment, which again helps to regenerate areas of economic and social deprivation. And the final point is really about when a government might increase spending. Well, it depends on the context, of course, but at the moment the yield on a 10-year bond for the UK government is 1.8%. It can borrow nominally at 1.8%, which if you take off inflation gives a real yield of 0. So the argument is this is the moment, this is the chance for the UK government to increase its borrowing, to increase spending on public goods, infrastructure in particular, because the cost of doing so is relatively low. Convincing? Or are you thinking of the big evaluation points? Well, here we go. Here are some risks and some drawbacks of increased government spending. I'll go through 5 points with you, and I think there's some key terms here in red. First point is that if the state provides public goods, the absence of the profit motive, the absence of bond and capital market discipline may lead to inefficiencies, some waste, and also some diseconomies of scale. So the unit cost may go up actually with the public sector, which reduces the value per dollar or per pound spent from the state. In many countries that have weak institutions, increased government spending on the surface is good, but it's linked with corruption. Money finds its way out of the system. There could be increased spending on vanity projects, perhaps military hardware which wasn't really needed, or some sort of major public buildings. And that waste, of course, leads to a loss of allocative efficiency, bring in an efficiency argument. Third point is that governments often go ahead with projects without doing a proper cost-benefit analysis. They may suffer from information failures, so therefore increased spending can lead to government failure. In some cases, it might be better for the government to fund the public good through taxpayers, but for the private sector perhaps to actually do the service provision, to run the prison, to maintain the motorways, for example. Government investment projects often suffer from costly delays, which the taxpayer eventually has to pay. The burden falls on the taxpayer. And the fifth point is that free market economists believe that actually in the long term it's not the government that drives innovation, that actually it's the private sector operating through the profit motive and the market mechanism that ultimately is the biggest single catalyst for innovation and dynamic efficiency. The state might crowd out the private sector if it increases its spending. So there we go. This is a big area of market failure, and hopefully you've seen some of the links between public goods and other areas, including macroeconomics, including aggregate supply and competitiveness. But public goods is a key area to revise, and it's one that the examiners are oftentimes very keen to test your understanding. Okay, thank you very much indeed.